Hey everyone, thank you for coming back to the Proof of Pain podcast. I am your host, Tony. Please like and subscribe. I keep being told that I have to be on top of people to do so. So I
Sure.
have a very special guest. I'm actually extremely excited and kind of starstruck in the Bitcoin world having Richard Byworth here. He's chairman at Future Holdings, host of the Syz the Future. I think I said Syz correctly there. Board member at Relay App, advisor at Jan3, and advisor at XCE Official. And he's just a Bitcoiner. So thank you for being here. Thank you for saying yes. And can you give the people a background and how you got into Bitcoin, your background, and your life at Nomura?
Sure. Yeah, happy to. Yeah, I pretty much started my career at Nomura. I had a brief moment at BNP Paribas, but at Nomura, I was on the convertible bond desk initially as a junior trader. Then I ended up running the market making book for International. And then I moved to Tokyo to launch the international convertible bond business. Back then, the market was being dominated by two firms, Goldman Sachs and KBC, and just coming into Japan with the Nomura brand was very easy to knock those two off the number one slot. So we grew exponentially through from 2005 to 2008. Already by the crisis, we had Merrill Lynch and I think it was Citigroup pretty much just give up trying to do international Japanese convertible bonds because Nomura just had so much market share, which meant that in 2008, when Nomura acquired Lehman, which was effectively a reverse takeover, because all the management from Lehman ended up replacing all the management at Nomura, certainly on the international side, I was one of the few managers that managed to keep my role and went on to inherit their equity derivatives business and the Delta One business, the futures options business. So as a result, I have a pretty broad knowledge of those products, but also in terms of structuring products as well. You know, we spend a lot of time with clients, hedge fund managers, designing things specifically for them that they would be wanting to buy from clients being the corporates and what they needed. So it was really an exceptional way to cut my teeth in the capital markets. I left Nomura at the end of 2017 and ended up joining a friend of mine who actually had also previously been at Nomura to launch a crypto business, which was interesting because probably a year later, I discovered Bitcoin properly and became a Bitcoin maxi. And by that stage, I was CEO of the company, running a crypto company, which you can imagine that leads to a number of issues on a sort of personal alignment level and values basis. And so that was really tough for me.
What year was that?
That was 2018, end of. So it was when I was sort of becoming a maxi through to end of 21. So obviously it was COVID. I was separated from my kids who'd moved back to Switzerland with their mother, who was Swiss. So I was having to travel throughout COVID from Hong Kong to Switzerland. It was brutal. I did the most quarantine of anyone I've met, and people did a lot of quarantine. I did 17 weeks of isolated quarantine in 18 months. Yeah. So it was really tough mentally, plus running a company which you didn't believe in so much anymore because it was crypto versus Bitcoin. Binance came in to acquire the company, and that gave me the opportunity to step down. So I said to the board, I don't agree with this move at all. And so I stepped down and I moved back to Switzerland to be near the kids. And then my good buddy, Mark Syz, gave me a call and said, would I consider running the hedge fund business for him over at Syz Capital? So did that for 3 years to the day. And Mark and I left the company in November to start up our own company, which we're in the process of launching this month, actually. So yeah, it's lots of exciting times. And as you mentioned in the intro, involved with quite a few Bitcoin Treasury companies. We sold Future to H100. So in the process of integrating that business. So working very closely with Sander, but also there the plan, of course, is to bring H100 to Switzerland, which opens the door to a very different level of liquidity, but also a very different financing market. The bond market in Switzerland is an 800 billion bond market, with your average rate being somewhere between 0 and 0.5%. Wow. So base rates are 0. So you can imagine if you buy a 3-year bond on a 1% spread, if you try and sell that bond at any time in the life of the bond, you will probably end up losing all the accreted yield that you had got. So the bond markets are basically broken here. People are desperate for yield. And so we believe very strongly that by delivering something similar to the digital credit products that Saylor's created, that Switzerland would be just the best market.
Yeah, I agree with that. The STRC, that seems to be the iPhone moment, like you keep saying. It seems to be pretty clear. I want to go back a little bit to when you were in Nomura, and then, so straight from Nomura, your friend introduces you to crypto, and then you joined the crypto company?
I read the book Sapiens, where Yuval Harari had some obviously very interesting ideas about the future, and he talked about AI and the amount of disruption that's going to cause to the job market, and all these very sensible ideas, some of them a bit scary and dystopian, of course, but he kept talking about blockchain and Bitcoin, and I was like, why is he talking about what? I'd always dismissed Bitcoin as a scam on the internet. And so I said to myself, okay, I probably need to try and understand what this is really. And so tried to read the white paper the first time in 2017, and then I ended up eventually just buying some Litecoin. Did like a 5x in 12 days or something stupid. It was the tail end of the year, and I was like, this is completely insane. And so then my friend had approached me about his company. I'd actually invested in the company. It was originally a mining company in China, and so then when I left Nomura, he's like, well, could you come and help me build this thing? And so that's how I ended up joining him. But I was originally going to be joining a private equity company, stepping out of Nomura. But yeah, I just felt with everything that was happening and how fast it was moving, it would be a great opportunity to understand what crypto really was. And then, of course, I through that process, I understood what Bitcoin was. And that was very important, obviously.
What I would like to get into with your brain and your lens is coming from traditional finance. What was it that, I guess the crypto and blockchain was just kind of like an introduction, and it's kind of fascinating, and it did a 5x. So it's like, okay, well, there's money to be made. So I'm wondering if you came in from the lens of, as a trader, some people have kind of like a negative view of trading. I don't see it that way. Like investing and trading. Did you come in with that investment the investment mindset or the trading mindset? And did your traditional finance education, did that make you understand crypto better? Was it more of like, well, I'm trying to figure out this technology, but when you figured out Bitcoin, you're like, okay, well, now mathematically this makes more sense. Which angle did you come in from, and how did that work?
Great question. I actually got convinced to join the company because it was great to have this as an idea, but I wanted to, my friend was just another investment banker like me, and I knew he didn't really understand crypto. So I wanted to meet some of the engineers that he'd brought on board, and there was this guy who was brilliant, young Spanish guy. And I sat down with him and I said, look, can you just explain to me what we're really dealing with in this asset class? And he explained, back then the theory about Ethereum was this world computer. And he explained this theory to me, and it just sounded very interesting and fascinating. So I think, I wasn't thinking of it so much as a trader. I mean, when you have something go up 5x, then you have to pay attention to it anyway and just say, well, look, am I thinking about selling this now, or am I, thinking about this as a real investment? I hadn't invested much money at all. It was really just to play around. And so again, I did play around with trading a bit, but as soon as I understood Bitcoin, it was really just came down to accumulation. I'd been a gold bug back in 2008-9 when I realized what the global financial crisis was going to likely do to paper money. And so I was very well positioned to be someone who understood digital gold. And I had this sort of moment where I'd gone to bed after just listening to a podcast, and it had just digested, and I'd woke up the Saturday morning and said, I need to own more Bitcoin. And so I just really started focusing on getting more Bitcoin.
So were you a gold bug before 2008 or
Not at
that
all.
whole,
No.
not at all? What made you switch, or what made that click?
It was the money printing, because I was a UK guy based in Hong Kong. So Hong Kong dollars is pegged to the US dollar. So if you're in Hong Kong, you generally think in US dollars. I always knew that I'd probably spend a lot of my life in Switzerland. So I'm looking at Swiss franc, I'm looking at pounds, I'm looking at dollars. And, as you're trying to accumulate wealth in an investment bank, a lot of people it's always thinking about what you're getting paid that year and what the bonus pool likely looks like. And so I would always be thinking, how can I make sure I store the capital most effectively for my kids? And so when the global financial crisis happened and the amount of printing of money was unleashed, and it wasn't just dollars, it was everywhere, it became really clear that debasement of fiat was just going to continue exponentially, and the problem was just going to kept getting swept under the market, so to speak, carpet, so to speak. I said, well, how can I store my value, my work? And gold was obviously the best solution at the time. I didn't know about Bitcoin, never heard of it. And that was another thing. And I always say this to people: if I'd known back when I first heard about Bitcoin that there were only 21 million, then I think I would have probably got it a lot quicker. But it was a kid on my desk who'd come over from Lehman who was always banging on about it, 2010, 11. And I was like, could you just focus on sales? And he never did. And he's been retired for about 7 years now. So,
Yeah, so basically that 2008 gold bug paper printing stage, it was just it's so easy to go from that mentality that Larry Lepard, his book The Big Print,
Yeah.
it does such a good job of laying out the whole situation. I just don't see how, being a gold bug, how you don't see we agree on the same problem. The solution's different, obviously, but to not even entertain it a little bit seems kind of short-sighted to me. I think somebody like you that's open-minded, you're kind of forced in your line of work to see new things and see new opportunities. So do you think that's what made it even easier for you?
I think it was probably because I hadn't got an economics background. I had come into investment banking. I didn't have a MSc like many people, and so I'd actually done a French degree at university, and so, but I was very strong at maths always, and so whenever I was coming into a new product, and obviously I started with convertible bonds, then I would have to, sort of really start from the very beginning. And I think that equipped me well to be able to always, throughout my career in investment banking, to be like, oh, no, sorry, I don't understand that. Even when I was an MD, I'd be like sitting in a meeting, with someone who was explaining something. I was like, no, sorry. I have all my junior kids sitting around me. I was like, no, I don't understand that. You're going to need to explain that again. And I always made a point of trying to help the juniors understand there's no shame in asking what could perceptibly be a stupid question, because if you don't ask the question, then you will be more stupid, because you have to sort of bluff your way through. And I saw that a lot in the investment bank. Like, most people didn't understand basic derivatives. Most people didn't understand anything other than just cash equity. So it was always quite, it served me very well in my career. And I think it served me very well with Bitcoin. I think, many of my very good friends are still, in that world, and many of them just will not and cannot understand Bitcoin. And, there are multiple reasons for it, but I do believe that being open to say, I don't understand this, I need to understand it, I think is probably the great unlock when it comes to Bitcoin.
Yeah, it's letting go of that pride and that ego, right? Because
Yeah.
you come from this world where you do understand it, and you got to be open enough to say,
Yeah.
"Hey, I don't understand this. Let me ask questions. Let me be open to it." Okay, so you ended up getting Bitcoin, understanding Bitcoin, and being convicted. When did Saylor's glitch in the matrix? I know you've mentioned that. How did MSTR, Saylor, the glitch in the matrix? When did that come into your purview? How did it all click at that point? Because I'm assuming that might have been in 2021.
No, it was straight away.
Really?
And the reason was because I had been having a battle with. I advise a few people personally about their finances, and this family member had a very large UK pension, and they wouldn't allow him to buy any Bitcoin ETFs. And so I had quite a number of fairly frustrating calls with the trust and the managers of the pension, to say that I wanted Bitcoin to be a part of the portfolio. And obviously I knew Bitcoin pretty well by then. I was running a crypto company, and they absolutely refused, even though I was officially in, power of attorney within the pension. And so MicroStrategy came along and said they were going to buy Bitcoin on the balance sheet. And I was like, great, okay, there it is. Immediately put 10% of the portfolio into MicroStrategy. That started growing. I just kept slowly increasing the participation through sales of other things. And so obviously my family member is extremely happy with that. I got made aware of Saylor very early, and obviously his use of convertible bonds was something that I paid attention to. And it all started probably end of 24, sort of mid to late 24, when he announced the 21-21 program. And I wrote quite a long LinkedIn post about it, and explaining what he was doing and how the convertible bonds were going to just really help. And so someone reached out to me and said, would you come on my podcast and explain how convertible bonds work and why this is an important tool? And so from that point on, people wanted me to come on and talk about this stuff.
Yeah, back in 2024, I think I think I was already following you on X, but there was a podcast that you did with Hunter Jeff Walton.
Yep.
That was like a masterclass. I followed along the best that I could as a retail participant. I think I might have gotten 80% of it, which I think is probably enough to kind of, just wrap your head around it. But the way you explained it made a lot of sense. Now that we're on that topic, I think one of the things that people were not expecting that you did bring up was that you have to hedge it via shorting if you're the buyer of the convertible bonds. And I think a lot of people weren't expecting. I don't know if Saylor wasn't aware of it. I would be very surprised if he didn't know about that. But I know that became a big issue, and that kind of held back, allegedly, the price of MSTR at the end of 2024 and maybe at the beginning of 2025, I think. But there's been a lot of arguments, including myself, where I'm not really clear. It sounds like the best way to go with convertible bonds is being very selective and going with long only buyers of convertible bonds. That would be the best case scenario. Where do you think that MSTR might have made a mistake, or maybe it wasn't a mistake? Where do you stand now that 2020 hindsight?
Yeah, I think what Saylor, because I talked to Metaplanet about this as well, and I sort of pushed Simon a lot on my discussion with him on the first podcast, or maybe it was the second, I'm not sure. But, a convertible bond is a really nice way to accrete value. And so when he was a 5 times MNAV, it probably wasn't really needed to do an extra 30%. But in an environment like this, actually, convertible bonds are very interesting. The reason that Saylor's moved much more anti-convertible bonds is twofold. One, you're absolutely right. Your general investor in a convertible bond will be hedging, because that's where the value is. Like, it's embedded cheap option, right? And so you trade the gamma as it goes up. You're selling more, the delta increases. So the probability, the delta that it's going to end up in the money increases, and so you're hedging it more and more that you need to be selling stock into that. But obviously what Saylor understood over time was he's creating another seller in his stock where he wants to be the only seller in his stock, right? Because he wants to be just cranking that ATM all day long. The other thing is the credit, right? It's ultimately a debt instrument. And so, he has to pay that money back at some point if the bonds are not converted. And so, that takes up collateral base within his capital structure. So, now with the perpetual preferred equity, which is not a fixed income product, it's not a credit product per se, but it is to some degree. It's not on the capital structure as debt, but it leverages the collateral. So it sits on the collateral base, and people feel comfort with the credit based on the amount of collateral that is backing it up. So every convertible bond that he has is sucking away his potential to be able to do much more in the prefs. If you imagine it on a ratioed basis, so the commitment on the pref is the coupon or the dividend, and the commitment on the bond is the entire notional of the bond, right? So that's the way that someone will model it in a credit model, and even with a 5-year convertible bond, even if you're paying double the coupon on or 10 times the coupon on a perpetual preferred equity, then you essentially have less credit duration. So that's really the way to think about it, and that's what he I always joke that he was kind of feeling his way around in the dark in the capital markets, because even when you sit down and you speak to investment bankers, they don't really understand it. And we had some really interesting conversations with investment bankers when we were building Future in Switzerland. Like, they just didn't get it. And thankfully, being someone that speaks their language, over time I was able to get them there. But poor old Saylor, he was having to deal with Morgan Stanley and getting them to guide him, because he wasn't a capital markets guide back then. I mean, now he has, as Saylor always does, has studied it to a degree where he's extremely proficient in all this, and so he's an architect, an engineering genius in this space. But I would say, in the first couple of years, he was feeling his way around in the dark a bit.
Do you see any mistakes that were made with the convertible bonds, or was it all pretty much done standard?
I mean, look, he was selling them at very high volatility. He was, he hadn't discovered the preferred equity, and it wasn't something I'd thought of, or many of the credit guys I speak to had thought of. So there was nothing really wrong with the strategy back then, other than it was creating sellers of his stock, which he was finding very frustrating, rightly so. But it's just and you identified the way of solving that, and that is to distribute to outright investors that will never hedge. And so I think he obviously did that with the last one, when he put 25% of the bond issue into Allianz. I mean, I don't think he did anything wrong. I mean, many of the bonds are so in the money that all the selling's done. So everybody's hedged on like a 95% delta anyway. So there's not much selling left to be done with them.
I keep going back to the original Flywheel thesis. Can you explain a little bit for people that have forgotten, or people that are maybe coming into the space now, that things are, in my opinion, they're undervalued. Maybe now they're starting to discover certain aspects of MSTR, Metaplanner you brought up, or Smarter Web, or H100. That original Flywheel, is that something that smaller Bitcoin treasury companies can still apply? Or has it moved past? Can they still apply convertible bonds? Or is MSTR just too big of a fish, and they're going to do preferreds, and they're going to start swallowing up different locations? As a smaller Bitcoin treasury company, does the original Flywheel still matter? Convertible bonds for smaller companies, is it still valid? And how do the preferreds kind of go in as a smaller Bitcoin treasury company from your view?
Yeah, I think it's another great question. I think in a bear market, there are a lot of limitations for the smaller companies because you don't have that premium to MNAV, and so you can't just do the very easy accretion through dilution, which comes with equity sales. Because any equity you sell is negatively accreting or decreasing Bitcoin per share. So in this environment, there are a couple of options still open. One is obviously perpetual preferred equity, but you need a fairly meaningful amount of Bitcoin to be able to do that, because if you issue a 1 million pref share, the liquidity is going to be terrible. It's going to trade like shit, and no one's going to want to buy it. So you do need a certain mass to be able to go down the route of the perpetual preferred equity. So the other option, and we did one for Connecting Excellence just before the end of the year, was a Bitcoin denominated convertible bond, because with that you get rid of the credit risk, because in the point of paying it back, if it's not converted at maturity, you just give the Bitcoin back. So it neatly gets rid of that credit problem, and so obviously when you want to go towards prefs, you don't have the incumbents problem. So obviously with the current market environment, the key is to, if we want H100 to be the dominant player in Europe, we've got to make sure that we scale the Bitcoin Treasury very, very quickly. And I think, we've been discussing sort of what we think is the right level. You want to get past 5,000 Bitcoin. And once you get past that level, I think you've started to hit a level of collateral base where you can start to issue some perpetual preferreds. Yeah, I think every company that is sort of in the running to be the company for Europe, which is Smarter Web, Capital B, H100, has to think about that view and how to get there.
Yeah, for me, it seems, for smaller companies, seems to be sell shares, sell stock when the premium is high, the MNAV. In a situation like this, convertible bonds with buy-only funds like Allianz, I think is the name of the company. To me, it seems like, is there anything else that people aren't thinking of?
I think I would move you more away from fiat-denominated converts to Bitcoin-denominated converts.
Like the TOBAM style?
Well, like the one we did for Connecting Excellence, which really is a pure play. There's no fiat involved whatsoever. It's a pure play Bitcoin denominated convertible bond. Because of that problem, because you do eventually want to get to the perpetual preferreds. So as a result, you need to make sure that you don't have that any debt on the balance sheet. You really want to make sure that you don't have that. So a fiat denominated debt is problematic, right? You saw it with Sequans, you saw it with why is the name escaping me now? Nakamoto. The problem is, if you have fiat debt in an environment where the market is crashing, and we know Bitcoin can crash, then you can very quickly get yourself into trouble.
Maybe a year ago, I was pretty active in the Bitcoin Treasury spaces and communities and whatnot. And I was getting a lot of crap for saying that it's a competition. And I get it. Bitcoin, if we're all on team Bitcoin Treasury companies are competing at the end of the day for not only attention, for market share, for the Bitcoin itself. I think Saylor has said before that there's always going to be space for smaller Bitcoin Treasury companies in different regions to issue their own preferreds and whatnot. Do you just have to size up a Bitcoin Treasury company, period? Or is it possible to just maintain a smaller company with Bitcoin on the Treasury, and just grow it at a smaller pace? Because it seems to me that it's one or the other. I don't know if you can do both, if that makes any sense.
I think Saylor put this best in the recent What Bitcoin Did podcast with Danny Knowles, and it's what we're looking at with Connecting Excellence. I mean, Connecting Excellence is a tiny company, but the reason that I was happy to get involved with them is because they are a cash generative business. And so ultimately, any person that can as an individual, save money every month should be putting money into Bitcoin. And so in the same way, a company that is cash flow positive and have profits that, real profits, then they can be putting that into Bitcoin. And that in itself creates an interesting flywheel for a company like Scott's company, because it's a small market cap. In a market like this, they're just going to use the cash flow to buy Bitcoin. And then as the market wakes up again, we get a bull market, then a 6 million market cap probably will command an interesting premium on an MNAV basis. So he'll be able to get that flywheel going and then kick everything off around that. So, with H100, we obviously have a different strategy. We want to be leading into Switzerland and into the perpetual preferred equity. So for us, it's about maximizing the amount of Bitcoin. I think I agree with Saylor. Like, every company should be a Bitcoin treasury company. My partner Mark Syz on our, he runs the private equity side of the business, and what do you do with private equity? You're looking for an exit, right? You're looking, how can we exit this company? If you can get enough EBITDA cooking, then you can be buying Bitcoin on the balance sheet, and you're much more likely to be able to get listed as a company that is accreting Bitcoin every year through its cash flow. So I think there's really no limit. I think every company should be a Bitcoin treasury company. But what I think you're specifically talking about are capital market engineering companies that leverage the Bitcoin as the core collateral. And I think, as we've sort of concluded, you need to have a big amount of Bitcoin to do that. And obviously Saylor has the biggest amount of Bitcoin. Metaplanet is pretty high up there, and Metaplanet have very strong capital market engineering capability, and so obviously we feel that we can replicate that for H100.
When it comes to private companies, what would you say is the best playbook? I think you said every company should be a Bitcoin treasury company, or at least have Bitcoin on the treasury is probably the better way to put it. So for let's say a mom and pop shop, your local landscaper, it's the best move to just put a portion of your cash flows, put it into Bitcoin and just grow it that way. Is there anything creative that a smaller private company can do? Is it even worth it? Is it too risky for a smaller company to even tackle leverage or to tackle, the equivalent of taking a HELOC, or, because bonds are not going to be possible for a landscaping company. So is it just a matter of putting your cash flows in and just buying the Bitcoin and holding and letting the CAGR do its thing? Or is there something else that you can think of?
Yeah, I mean, it was interesting when I launched, I don't know if I mentioned it, but I launched one of the largest Bitcoin denominated fund of crypto hedge funds in the world last year. And, many of the investors were actually private corporates that had Bitcoin on the balance sheet. We were targeting a certain yield in Bitcoin. So I think you can look at stuff like that. I mean, we'll be re-engineering that fund in the new firm to make it even lower volatility and have some different aspects to it. But I think if you can find something that is extremely low vol to generate yield, then why not put a portion of your Bitcoin to work there? So long as you've done all the necessary due diligence and you understand the people behind a product like that, then I think it's, that's really important. But there's no reason why you shouldn't. And indeed, I do so with my personal Bitcoin.
Perfect. I wanted to go into the because I think everybody got this wrong, or most people got it wrong. I know I sure did. 2024 and early 2025 predictions of Bitcoin, I had it much higher. Let's put it that way.
Yep.
I had much higher for them, for treasury companies and whatnot, and that's the reality turned out to be quite different. I'm pretty sure that everybody has that story. So can you give your perspective on the predictions and then what went wrong?
Yeah. Look, I mean, at the end of the day, we all know where Bitcoin's going. It's just trying to plot the path is impossible. And yeah, when you had as many things lining up as we did, and we do still in the beginning of 2025 and late 2024, then of course I think everybody got mega bullish, and myself included. And I'm still mega bullish now. I think, what went wrong? I don't know. I mean, I read what I think is probably the best explanation recently on Twitter around the option market, and the fact that obviously option volatilities have compressed significantly. And so if you could get a meaningful enough option position and then tonk the price through the liquidation levels, then you could get an uptick in the volatility, you'd be in the money, so you just absolutely print cash. And I think whoever was doing that probably made so much money that they did it again and again and again, until now we're at levels of volatility that it doesn't make any sense to be buying that downside when you're dealing with 150 vol. But yeah, I think that's probably a pretty good explanation. Could have been a Jane Street type player that was doing that. I don't necessarily buy in to the whole AP positioning of Jane Street to use that to manipulate the price downwards. I mean, you can manipulate it either way at the end of the day. So I think the option market is probably the best explanation. In terms of backdrop, I think we are really looking at a situation where global monetary expansion is going to continue. Who sees that first? It's the central banks. Central banks are not buying Bitcoin, they're buying gold. So gold moved, and then I think you'll have people rotate into Bitcoin. I think we're already seeing the beginning of that. Bitcoin's massively oversold here. I cannot believe that, yesterday we were looking at Bitcoin with a 60 handle, and we had to look at that for a couple of weeks. But yeah, I think probably now with the ISM manufacturing index starting to reverse, it looks like we could be in business expansion. Trump is, obviously doing a lot of things early in the year, and I think positioning probably to be able to print a sizable amount of money into the midterms to get everything really cranking. So I'm pretty bullish into the second half of the year.
Perfect. I know that we're coming to the end of our time, so there is one thing that I wasn't thinking of that I'm gonna skip some of the questions that I had, because I think you're the perfect person, or as close to the perfect person to ask. Paper Bitcoin is a problem. I want you to kind of dumb it down for the layman, because yes, Bitcoin is scarce. It's 21 million. You can make more, and there's some clever people that think that, oh no, there's more than 21 million because there's 2 quadrillion or whatever Satoshis. And it's like, okay, well, you can cut the pizza. And it's just like, and some of these people are PhDs apparently. So I'm like, okay, well, I'd rather keep selling lights, do what I do. But yeah, Bitcoin is scarce. There is no worry for the spot Bitcoin itself. But the problem is, if there is paper Bitcoin and there's X amount of that, that could manipulate Bitcoin. So can you dumb it down? And from your perspective, is paper Bitcoin a real concern?
I think the answer to that long term is no. But as I just explained with the option market, you can have short term instances where it can be violently pummeled with someone who's making money every expiry, to just keep hammering it and keep doing the same trade until vols really spike. There's one, potential risk to Bitcoin that, I often mention to people that I don't think a lot of people talk about, but that is the Fed deciding that they're going to just print obscene amounts of money to crush Bitcoin with the futures market. Because if you've got infinite dollars, you can flood the market with paper Bitcoin. Now, I don't think the Fed necessarily has any incentive to do so. I think under the previous administration, I would be more concerned about something like that.
Would that work like a short position?
Yeah. So they'd just be printing money, shorting.
On the futures end.
Yeah, and just crushing everybody's will to live in Bitcoin. And then turn around and buy a significant amount of Bitcoin down at, like, I don't know, $5,000 or something. I mean, that could happen if the United States chose to do that. I would say pretty much.
Could that have already happened?
It could have been part of what happened in the last few months, but it's a bit of a left field theory. Scott Bessent certainly knows how to break markets, break pegs,
Yes.
break these sorts of things. So, I mean, even the most resolute Bitcoin bulls do get tested in bear markets. And if you can push the bear market to a level that is so ridiculous that it's like no previous bear market that's ever been witnessed, then maybe you can shake out a few more people by introducing quantum FUD and Jeffrey Epstein FUD, and everyone's like, oh no, this is actually the end of Bitcoin and my whole thesis is out of the window. Sure, that can happen. It could be effective, but again, long term, it's not going to matter. It's not going to work.
We got maybe like 2 or 3 minutes, so I'm going to do the lightning round, and you can answer these with just a simple yes, no, or just however you wish to do it.
Sure.
Your most bullish smaller Bitcoin Treasury companies outside of MSTR, and I don't know if I should include H100 here because I know that you're going to be a little biased, but outside of MSTR, your most bullish Bitcoin Treasury companies.
In terms of position size, is H100, and then of course Connecting Excellence. Those are the two companies that I'm actively involved with, and I put my money where my mouth is. Elsewhere, I've been talking to someone who's working on a project in Indonesia, which I think is a very interesting market because of the tax exemptions for the stock market versus Bitcoin directly. So I think it's just understanding certain nuances of different regions. I would say that in terms of team, obviously MicroStrategy has the gold-plated team, Metaplanet as well. I think Strive have a very strong team. Other than that, I would really say that you need to look at regional specifics. And but my two focus area in the smaller space is H100 and Connecting Excellence. Yeah.
Perfect. How is the Future and H100 combination going?
Great. Yeah, I speak to Sander and Johannes every day. We're getting more active with Donald, who's one of the other participants that we brought over from Future. So Donald I brought on as an advisor to help me on the fixed income sort of structures. Donald is a ex-Caxton and Citadel credit hedge fund manager. So yeah, one of the best positioned in the world to be designing product around this specifically for Switzerland. And so, yeah, I'm extremely excited about the combination of the Future team and the H100 team. I think it is definitely the team that can be the most accretive in Europe.
Great. What is one thing retail gets wrong about Bitcoin Treasury companies?
I have one particular investor that calls me regularly about Bitcoin treasuries, and he's like, why is Bitcoin down 10% and Bitcoin treasuries down 15%? I think, it's hard to understand that this is essentially a leverage play on Bitcoin. Yeah.
Okay. And then the last one, it should be pretty quick. It is Bitcoin price at the end of 2026 and at the end of 2030.
Oh, 200,000 end of this year.
Ooh, okay. 2030? What do you think?
2030, 500 to a million, somewhere there.
Okay, we're looking good. We're looking good. All right, Richard, thank you so much. Can you tell people how to find you?
Yeah, sure. I'm most actively on Twitter, /X. Richard Byworth is my handle. I do occasionally look at LinkedIn, but I try to avoid it at all costs. It drives me insane. Yeah, that's about it.
All right, man. Thank you so much. Everybody, like, subscribe, follow Richard. I'll put all the links below. And thank you so much. Hopefully, we'll have another conversation at some point.
Thanks, Tony. It was a real pleasure. I enjoyed it. Thank you.
Likewise. Thank you.